In today's video, we'll do a preview of the week ahead. Yesterday was a bank holiday over here in the UK, but over in the United States, markets were still open, trading, and we were still seeing economic data being released. Now, reviewing what equity markets did in the US yesterday, we saw that the S&P was lower by approximately 0.6%, and bond yields, they also moved higher, so the price of those bonds had fallen during the day. Now, that was due to the release of the ISM services data. Now, pouring through that data, we can see that at a headline level, that was actually stronger, which is some positive signs for markets, where if we look at the new orders component, that was actually higher as well. So we're not actually seeing tariffs yet impact that demand for services, but actually when we look at the prices paid component, that has also moved higher. So we're starting to see tariffs move higher prices in the US, and that really just talks to the difference in inflation dynamics that we're seeing in the US and over here in Europe. Now, that data also feeds through into some more important data in the US, where we see the US central bank, the Fed, have their interest rate decision. So markets are actually forecasting that we see 0 cuts from the Fed, so leaving rates where they are. But as we know in these videos, market participants will always be interested in the comments made by central bankers after those meetings. So if they can give any hints on growth expectations or their expectation for inflation, markets will find that information useful and incorporate it into pricing. Now, another way that we can see a divergence between that US inflation and European inflation data will be when we see the final PMI numbers released in Europe. So like the US, they will give us things like new orders and prices paid. So those numbers will be finalized, and it'll be interesting to see whether tariffs and the fact that more goods could be pushed towards Europe and also lower oil prices might pull down that prices paid component. Another way that we can see that divergence in inflation is within the Bank of England's interest rate meeting. So they have one too this week. Markets are actually forecasting that the Bank of England take rates down 1 cut, so by 0.25%. And once again, that really does talk to the difference in inflation. And we know that markets will be interested in further comments from the central bank. I guess the final piece of major data that we've got coming through that will help us gauge what's going on with tariffs is within China's import and export data, where we'll be able to see the impact on the amount of goods being exported into the US that tariffs have had. As we know, it is still US earnings season as well, so we'll continue to provide updates as and when they are necessary on US earnings. So thank you for watching today's video, and we'll catch you in our next episode.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.